afternoon. This is Chris Brecher with the Simpler Stocks free video for March 4th, 2016. As you see, it's only about a minute after the bell. I wanted to get this out real quick. Today was a highly unusual day. Now, what do I mean by that? I'm going to be doing a day trading class March 18th, and one of the things I want to focus on is correlations. When I prepare in the morning, I look at long-term correlations, I look at short-term correlations. And one of the two biggest things I look at is correlations between indexes like the ones you usually see on here on the futures main page that I've developed, that I've created. And the other is companion stocks. So I look at Home Depot versus Lowe's, Caterpillar, Deere, and so on. Well, today, usually what happens is if you see the ES is up, then the NQs, because the index is twice as expensive, are up double as much. Instead, the NQs were down 8 and couldn't get out of their own way. Now this third thing is the Russell being up 10. I've called that the Russell needs to outperform here because it's underperformed for so long. Looking at this, though, look at the bonds up 26. Usually when the ESs are up, bonds are down. Nikkei up 160. You'd think it would be up more than that. Next thing you have in here, transport's up 84. That's about the only thing that makes sense. You have the gold up $21, even though the market's up. Bonds up, crude oil up 3 cents, ES is up. It's like yesterday. It seems like it's almost like QE again, all over again, that there's a rush to buy almost every asset class. Now, in the midst of all this, this is what I find fascinating. Put up here bonds, which are up 26. Now, usually bonds are up on two reasons, either flight to quality or a weakening economy. On the other hand, check out Caterpillar today that absolutely exploded to the upside, which is an economically sensitive stock. Usually this indicates the economy's stronger than you'd think, which means that the bond should go down. So there were a lot of correlations that broke down today. Now, one thing in here, and I'm going to bring this up in a day trading class, is just because they're correlations, if they're not working intraday, all you do is you go off charts. What do I mean by that? If Caterpillar looks like this, it's above the 2-minute on every single, every little blip, you don't short it. The whole idea is there was no place to really short Caterpillar today. You had a little reversal here, but what do you notice? Oversold above the moving averages. So that was actually a buy trigger, not a sell. So the whole idea in these is when you intraday trade, sure, you want to watch the ESs. You want to watch the NQs. But the biggest thing is to look at the individual chart. Now, let me give you an idea of this. Here's the NQs up here. And they're holding right above support. Now, they have resistance up here. Now, look at the NQs up here and see how they rallied some of the day. But then look at Google, which is one of the stalwarts of the NASDAQ, you would think. And notice what this did. So I'm going to unlink these so you could see them clearer. And notice that a 15-minute chart, check that out. ES is straight up. Google straight down. What is this all about? This went on a tremendous amount of stocks. NASDAQ up. Facebook closed near its high yesterday. Couldn't get out of its own way. Gap down. No news. I saw no news. And what do I think all this is? Sure looks like a rotation to me. Forget about the bonds. I'm talking about in the individual stocks. It's almost as if they're buying for the dogs like the Caterpillars of the world and shorting the Facebooks of the world. That's all I can figure in here is going on intraday. Now, when you see this in here, it looks like a reversal. You have to understand when you say, oh, they look like they went up the end of the day, but look at the opening. Facebook opened up and went straight down. Look on the right here. Look at Caterpillar, opened up and just kept going up almost 3 more points from there. That to me smells a lot like a rotation. And that's all I can figure that this is. What do I think of the market now? Well, let me show you some ideas. Number one in here, what I want you to see is that here's the TFs. And we've been talking about this on the premium site now for a month. That when the TFs on a daily are underperforming the ESs and they have very little resistance on the way up, that what you need to buy is the TFs and look for stocks within that group. figuring that the ES is already played out on the upside and is up near resistance. As you see on here, the TFs aren't anywhere near the resistance yet. Well, they're closer to it than they started the day. But what you need to do is zoom out and look at a weekly of these. And look at the huge difference. You're talking about the ES is on the right, only 134 points from an all-time high. So it's right here. Figure this little drop and it's almost taking it back. Look where the TS, which is the Russell 2000, is 223 points from its old high. So you're talking about it needs to rally 20% here just to get back to its old high, when the ES is all they'd have to do is rally 5%. And so now you see on how it's underperformed, you've also seen why I want to look at Russell stocks. So how do you screen for Russell 2000 stocks? What you do in here is you scan in, instead of all stocks, you go to public. You go to Russell 2000. I always take the optionable because I always look at it like usually sometimes options give you a tell of what's going on in that individual stock. To give you an idea, if a stock looks good and there's huge put activity, you might not buy the stock when normally you would, because usually the option people know over everybody else. What I do then is I take the mark. You can make it 20, you can make it 40. I usually make it at least 40 because I want stocks that really move. Then you take off the option volume. That's a different scan I have. And then what you do in here is just a simple one. Add study filter. And I want the volume, the average volume, to be at least 500,000 shares. Now, there are a lot of other studies you could add with moving averages and such. I just like doing it like this. If you pop this out, believe it or not, let me take off options here. And I'll show you. It's only 68 stocks. So if you thought, oh, it's going to be 2,000 stocks, it's not. Because the Russell has a lot of tiny stocks. You take those 68. Then what you do is you save this. And I go Russell over 40. You save that. Now you might ask why I'm doing that. You went right here to that little floppy disk. I know a lot of people under 30 years old don't even know what that is. But you go to the floppy disk and save it. What you do now is you go to charts. And I like putting up a weekly and a daily. You then over here in the watch list, you actually make this your personal Russell 2000, Russell over 40. And now you know what you do? You just go through every single one to see if there's something that can turn. And that's how I found these stocks in here. I didn't link this. Let me do it better. Now, I know we've just had a big move up and a lot of these are already overbought, but that's how I find them. Other thing in here, I like seeing when something sells off on a weekly, I like it to have positive divergence on the way down. I do not want a stock like this, even though daily it looks okay, and RARE looks fine on a daily. The problem is it's prone to disappoint because it's had no positive divergence on the way down on a weekly. So it had a lot of times when I see that, all this is reacting and working off an oversold condition for its next leg down. Why do I mention RARE? I was mentioning that as a possible long, but saying you have to get out quick because bullish patterns, when they haven't formed a base on a weekly, are a recipe for disaster. So you have to trade them on an ultra short-term chart. To give you an idea, this RARE yesterday was a great buy. I was showing this right here and showing, let me zoom it out so you could see it and put it on a 78-minute. Then it looked great right here. And sure enough, it had a nice 6-point move up. The problem is if you don't put in tight stops, you get yourself in trouble. And that's why you have to put a 5-minute chart up here. And when you see this ledge here, you have to get out of Dodge right there. So I hope this helps everybody. Like you know, we talk about these on the premium side all the time. We don't give specific trades like buy here at 67 or whatever. We give a ton of ideas and a ton of help. We have a lot of videos that try to help people at least like once every week. We're trying to have a 15 to 30 minute free class on indicators or on patterns. And they've been a huge hit. So if you get a chance to sign up, we have a $7 30-day trial. And that also includes the learning stuff, the forum where I post a lot of charts at night. And also we have an hour live chat an hour before the opening. So I hope this helps you, and everybody have a profitable trading tomorrow with the unemployment report. Take care.